Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Wednesday, June the 30th, 2010. Well, a change of trend today, and we have the market making a slightly lower high and a slightly lower low, so technically a change of trend to the downside. Unfortunately for the bears, this is not supported by the short-term dynamics in the market. We actually have this long shadow on the bottom, and that represents buyers coming in. So as the market traded down below the previous low, the buyers came in quite solidly and brought the market back up to close it around this 86 region. The 86 region obviously is a strong level of support and resistance, and once again it's held this market here. Now, interestingly, the market found support as it traded down to around the Tenkan Sen, the green line here, which represents a trend in the fast-term time frame. And quite often that can happen. Now, Ichimoku indicators act as areas of support or resistance. So in this case, it's acting as support. Previously, you can see here this candle, it was fairly strong resistance. So it can change character as well, just like normal support or resistance. Now, we do have a fairly small red body candle. The red body tells us that the sellers made some net bearish progress on the day between the open and the close. So that's one factor that isn't in line with any potential rally in this market, and certainly supports the lower high and lower low for the new downtrend, but it's only fairly small. So the amount of bearishness here is only a very small amount. Certainly quite different than the previous day's candle, where it was a fairly large green body relative to today. And we haven't seen any major bullishness other than the fact that the buyers came in and bought the market when it traded down to around these support levels. Although we must say that with the market closing up towards the just above the midpoint level, the buyers did close this market in control, but it was only fairly weak control. So over the next trading day or so, the high of this candle and the previous candle around 86.25 become important for a potential rally, and there is potential for the market to rally up to 86.87 where the Kijun Sen is, and that tends to be an attractor of price action because it's flat, so that still may occur, that the market may trade up to there. But also we need to watch the low and the area around the Tenkan Sen for potential support, and if the market does take that out, then there is support down around the 85.20 down to the 85 region, and that coincides with the cloud. The market remains trading up above the cloud, so it has an overall positive bias. Trading up above the Tenkan Sen, which means that it's bullish in the fast-term time frame, but below the Tenkan Sen, Kijun Sen, which means that it's bearish in the medium-term time frame. So we've got some conflicting signals here. But the market is trading around some important areas of support or resistance, so we need to be patient and look for a breakout outside of those areas.